Global markets remain in free fall as coronavirus cases continue to spike.
The stock market plunges for the 7th straight day as panic over the coronavirus continues to fuel a massive sell-off. Yesterday, the Dow dropped 1,190 points, the biggest one-day point drop ever.
This is panic, okay? This is what panic looks like.
Stocks are now entering what's known as correction territory, meaning a drop of 10% or more in a matter of days.
As soon as we got a spread in Italy, in Iran, in South Korea, new cases here, that's when investors started to get really freaked out this week, and they sold because they're not sure of the extent of it, how long it will last, and what the true economic impact will be.
Expectations are now rising that the Federal Reserve will cut interest rates to bolster growth.
For the average person, it can help with interest rates, but, you know, it's not going to be as much of a change for the average person.
Who would it affect then?
So, well, it would help, you know, it would help banks. And then, you know, that in turn can have a little bit of a ripple effect in terms of, say, lending to someone who's trying to, say, take a loan or something like that.
For the average investor wondering whether to get out or sit tight, Schlesinger says it all depends on your specific financial situation.
If you needed your money this year, if you said, I had money in the stock market and I needed to buy a car, I have to pay a tuition check, and by mistake I had that money at risk, then I think you have to sell now, free up that cash, and make sure it's secure. But if you are if you don't need this money this year, keep your plan in place. I know it's hard to do. Again, you can feel the butterflies, don't act on them.
And this morning, White House National Economic Council Director Larry Kudlow tried to calm fears again over the stock market. He says stocks have now gone too far. He expects them to rebound, and he urged investors to think long term.